Good morning all, hope you're doing okay. It's pretty early today, but I wanted to get this bulletin done, get it over and done with, and then I can focus my trade because I had a couple of losses yesterday, so I need to recoup those losses. Because what happened with trading is that I was looking at things from a fundamental perspective, and you have to remember to look at technicals and sentiment. See, the reason why I lost a bit of money yesterday looking at the fundamentals is because the DXY was in free fall, and alongside the S&P and the Dow and the Nasdaq, and so that didn't make sense. That was illogical from a fundamental perspective. So what happened, I think it was just a stop punt on cross dollar. Euro USD took out two stop loss clusters. GU did, EA did, and UJ did as well. Lots of stops being hunted yesterday. And so it could have been probably just a liquidation, narrative where I just ignored the fundamentals. So usually fundamentals very, very strong, but yesterday we had a big breakdown of correlation between risk and the USD. The Swiss franc strengthened, the yen did strengthen, but then it weakened, and so it's pretty much a nightmare if you look at the fundamentals yesterday. And here's the Swiss strength on the daily and weekly now, so that's coming into play, and that probably took a few people by surprise. The dollar Swiss had breached parity, if you remember, and we're quite significantly below parity now, so that probably was a stop punt as well. There's the Swiss franc being strong by, which coincides with the technicals. Okay, so be careful. I think lots of stops being hunted, and it was quite nasty. So there's the sell on S&P, so we came down a lot, and then here's the buy here. So we can come up as long as they sell it, then we'll come up. That's it. Very, very simple, and that's that. So note that VIX is below 30. Gold could be making a sell, but we haven't crossed. Right, so you want to wait for another hourly candle and see what happens here, and if it crosses, then it's going to be a sell, and your stop would be up here at 1850 there. So it won't be too much for a large loss. That's where you'd have your stop, and then you'd short it, assuming that we cross here. Now what you want is things to align, which you see Swiss is aligning for a buy, CAD is, the dollar is, pound is for sell. Everything else is mixed. Right, so look for potentially pound weakness, CAD, Swiss, and dollar strength, but this is subject to change because it's sentiment. Friday, so this is the difference between last Friday. Dollar CAD is the greatest sell. Nothing really stands out as buy, apart from maybe pound yen there, but it's very just barely. What you're looking for dark colours, basically. It's not really a dark colour, but this is. So that really pumped. A lot of uncertainty yesterday, and so these two are equal, and that's kind of unusual. They shouldn't really be equal because there's a danger of inversion. If we get an inversion, that's going to be risk off, and it all depends what happens today. So Aussie Swiss might be a good short. Here remember we're looking at Swiss strength, so and also this is the weak, strong versus weak, so potentially this could be a good short. I just recorded the price to see how how it fares. It's not a signal, just recording for curiosity purposes. We'll come back to this later to see if it worked out or not, and this would be a risk-off signal because Aussie is sensitive to risk and Swiss is a safe haven. Euro yen is our best bet at 80% probability. It's okay but not great. The SEK and the Singapore dollar are better, but I'm not sure if everyone has those pairs. It's unlikely you're going to have SGD yen, but if you do, look at that for clues about US 500 direction. There's risk on. So, but we had a buy signal created from the sentiment on the S&P, so there is that. Stop loss cluster, largest mover was gold at 15% towards buy. Remember, this move has been and will likely reverse because it's taken stops and now he wants to come down to take stops, and that's how it works. It's a big liquidation event. You've got to be careful to be caught on the let's say you're not caught off guard. You want to be in with the sentiment. Dollar Swiss is sell here, so there's that Swiss strength again, and we might cross over 50%, so we've got to be a bit careful. If we cross over 50, it's going to be a buy, so be careful when things are 50-50. Yeah, so that's that. Our Euro Yen is our new largest stop loss cluster. It's huge, 6.64 size at 133.85. So it's very large, so it's possible we're going to come down to take that, potentially, but that's going to be a likely target next week, I think, if not today. Those signals, which is great. I'm happy that we didn't get any signals, because yesterday was an absolute nightmare, just horrendous. We would have probably encountered the loss had they have generated, because the markets were cruel yesterday, and it's a stop hunt on multiple instruments, and it's fundamentally illogical moves as well. So it tells me liquidation, stop hunt. That was the driver. And yeah, so Dixie should not have fallen so heavily in a risk-off environment. So it tells me the stop hunt, liquidation event. So many stocks were triggered yesterday. And that's it. So have a good weekend, trade safely, and I'll be back Monday. I'm going to try and recoup some of my losses yesterday. It was very, very infuriating. So just know you exit, and then you should be fine. And I was a little bit stubborn because I let my fundamental brain take over, but really it shouldn't. I was right about the correlation of risk and Dixie, but sometimes these correlations break down, and that's why we have to be careful. So remember to look at technical, look at your sentiment, and look at your fundamentals, but do remember that things break down as well, so you have to know your exit. If you don't know your exit, it's likely you're going to probably encounter massive losses and you might blow your account. So just be careful, have a great weekend, and enjoy whatever you get up to, and I'll see you on Monday.